back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, the Direxion Triple Leveraged Semiconductor Bull ETF, which goes by the ticker symbol of SOXL. Just a reminder, these videos are educational. We are not financial advisors. We do not offer financial advice, but what we do offer is our look at the price action in SOXL, both the current day and the past, as well as what we expect to see in the future. Today is Monday, July 14th. My name is Chris, and right now we're looking at the day chart for SOXL, and we can see that we have closed in a red hammer, almost doji candle, still respecting the monthly downtrend line that we have here, the year flip that we have here, as well as the weekly broadening formation that we have here. So as we talked about on Friday, we knew there would be, a fight around this level here. We're also entering back into kind of a chop zone up here. So as we said on Friday, we weren't predicting any downside action, but we said that if there was any, we would be ready for it. If there were entries that met our criteria for entering trades, that we would enter and try and capitalize on any downside action. Keeping in mind the momentum that we have out there in the market. It is the first day of the week, so the day and the week were red, but we still had the higher time frame month and quarters green, and as it pointed out a little bit earlier, the year, although it is red, it is very close to flipping green here at this 2813 level. So this morning we were able to capture some downside profit. Let's go ahead and go to a lower time frame chart. So 1 minute. We entered some scalps early in the morning with the lower high on the 1 minute. All right. So let's make this a little bigger so we can see it. So once price breached the bottom of this candle right here, so once it breached the bottom of this, we entered. We went down to, let's go ahead and bring up the micro time frame chart. We had retraced back to this 161.8 fib, and at that point, once we got the green candle, since I knew these were scalps, we entered on a 1 minute time frame. I went ahead and set a stop at the top of this candle. Once this candle started out, luckily it went down a little bit, so it gave us a little bit of room to breathe, and if it did continue to go down, we were still in the contract. We didn't just sell right away once we saw a green candle, but eventually it did go back up, breach this high, and that's when we sold. So we were able to capture from basically $26 down to $25.49, so about 50 cents to downside action. We sold all of our puts at that point. Again, remembering momentum, where we're at on the chart. This could have just been considered a test of this 50% line of last week. Remember, this horizontal long dashed line, it represents the 50% line of last week. So we knew that we were just going to be in and out. We got out, kind of sat on our hands, allowed time to assess the situation. We almost entered some more puts with the lower high, lower low on the 1 minute, but if you were watching the charts at that time and or watching our tweets, we could tell that price action was kind of slowing to the downside, possibly reversing. If we looked at the 5 minutes, if we look at the 5 minutes, I believe around that time we were getting a higher low. So didn't enter longs again, and actually I remember what it was. So there was the red 3, and we went 2 down, but what kept us from entering another short was the possibility of a 3, 2 down, 2 up. Now instead of going 3-2 down, 2 up, it went just green 3. So we knew at that point there was no real reason to enter, and it was actually time to start looking at longs, because when you have that double 3, it shows that price action was explored very very well to the downside. The auction finished with this little wick, so it had a good finish to the auction, and we were back to the upside. So we waited for a higher low on the 5 minute. We entered here at this, was it 26? I think it was like 26.10, I think, when we entered, and we were able to ride it up to. We exited at the overnight low when we went lower high on the 5 minute. So we could see we rode this up. It hadn't really violated any rules at that time, and we were able to exit. Let's look at the 15. Yeah, the 15 looked really clean. It was also not only a higher low on the 5 minute, but it was a higher low on the 15. We saw the big wick here coming up to this 238.2 fib extension, and we knew that it was probably about time to get out. We went back down to the smaller time frames, and once we had the lower high on the 5 minute, we went ahead and exited. So we had a sell set at the low a little bit below this candle. So since opening print, which is this price level 1, the overnight low and previous low a day, were all pretty close together. We knew there was probably a chance that if we came back down into this level for a second time, we'd probably go through some chop. So there's no point in even messing around in there. We just went ahead and put our stop around here. It was on this candle that our stops did sell. Again, if you follow us on Twitter, we do point out when we enter and exit contracts and what direction our contracts are in. We did enter into another call when we got a higher low on the 15, I believe. Yeah. So decided to kind of take our chances again here, because we were right at that price opening print, overnight low, and previous low a day. Since we were right around in this level, we got what did we do? I know, maybe it wasn't on the 15. I have to go back to look at our Twitter, but we did enter on a higher low. Yeah, it was probably on the 5 minute. So we did enter on a higher low, but unfortunately we did get stopped out. We had to set a stop at previous low a day. It was towards the end of the day. I think it was like 1:30 Central Time, so that's 2:30 Eastern when we entered the contract. Yeah, it was about 1:30. So we did get stopped with this flush, and I think it was like -7%. Negative on that contract, but we did take the opportunity on this lower high to enter some puts for next week to cover. We still have a couple of calls left for July 25th, which is next week's expiration, as well as the August and maybe even September. I'm thinking about selling those tomorrow if we do really get bad economic data or anything that makes it look like we're going to have a stronger push to the downside. I'll go ahead and exit possibly even the September contracts. Since we're in profit, don't really like giving up profit more than I need to. Already given up enough over the past couple days. If we go back out to the day chart and get something cleaner, so you see, already given up a decent amount over the last 2 days. Don't really want to like go see the gap filled or anything like that. And then we're really starting to give up profit. So if we get something else to the downside tomorrow, I'll probably sell out of all of the swings up through August expiration, possibly September, and ride the puts that we got into today, and look to add to those if we get the right triggers to the downside throughout the day. So, it was an alright day. Took a little bit of profit away with that -7. I think it was 7. It was 7% loss that we took on that second call. So that took a little bit out of the profit that we earned from the puts early on, and the calls for the you know second half of that push up this morning. Um, so decent day. Not nothing huge, but the main thing is we did not lose. Every day you can add to your your cash in your portfolio is a good day. Um, and we're not looking for huge days right now because of the swings that we're in and that we've been in for 2.5, almost 3 months now. So um, yeah, just sticking to the plan. Unfortunately, it's nothing crazy happened today, or fortunately, I guess either way, to the upside or to the downside. Um, if we go in here, let's go ahead and move our 4-hour markers. And again, if you want more information about how we set up our 4-hour markers, go ahead and check the description, and there's a link to our video. Um, there's a link to our video that describes more in detail what these 4-hour markers are, how we lay them out, and how we use them on a day trading and scalping perspective to maintain good rules for good entries and exits, and consistency with profitability. So the first thing that we want to do is change our opening print for today to the opening print for the week, and this is week ending 7/18. So we will change this to a red dashed line and keep that there. We'll go ahead and change it on our day trade chart. Week 7/18. We'll change it to the red. And then one more on our swing chart. Change it to red. Alright, so we have our opening prints marked for the week. Now we'll go ahead and move our 4-hour markers. Here's the 4-hour up trigger. Work with me here. Alright, and here is the previous high of day. So we'll move that to today's high. Then yesterday, the 4-hour low for the second 4-hour of the day, trigger gets moved there, and previous low of day gets moved to today's low. Alright, very simple. We'll do this for one more chart. Previous high of day moves to today's high of day. 4-hour up trigger for the second 4-hour of the day moves to this high of today's second 4-hour candle. The low moves to today's low, and the previous low of day goes to the previous low of day. Alright, so now that we have that out of the way, let's go ahead and kind of zoom back out again, and let's look at things from the week perspective. And if we look at that, remember what we talked about on Friday, how we've had 1, 2, 3, 4, 5, 6 weeks in a row that have been green. And I asked for somebody to, for anybody to update the comments with the last, or I think it's happened a couple times, the last times that SOXL has run for 6 weeks or more, what happens after that. And nobody answered, because I think the answer is pretty obvious. It usually turns to the downside. Now, am I saying that's what's going to happen this week? Absolutely not. There are way too many catalysts coming out this week. CPI just alone tomorrow is enough to send the market skyrocketing or drop tanking relative to recent price action, of course, not overall, but we're still an inside candle on the week. We haven't breached the low. We haven't breached the high. We're smack in the middle of last week, so we still have a very good chance of going two up. Going and flipping the year back green. Fully breaking free of this monthly downtrend line. Could be pulling this 50-day moving average back up to cross back over the 200-day moving average here. There's still a great possibility of doing all of those things, but we still have to, respect the fact that we're riding a weekly broadening formation with 6 weeks of green candles, still yet to turn the year back green. The 50-day is still under the 200-day moving average, and we've got this monthly downtrend line right here. All right, so it's just going to be a fight, and I'm not jumping into anything anymore, August or September contracts to the upside right now, because there's just not enough information yet to tell us whether we're going to continue higher or lower. I would hate to, buy at a high when there's going to be another pullback. And while if I've given myself time with buying, September calls, it's still the fact of the matter is I've got poor entry on, however many calls I get then, and got to add. I don't have to, but I will most likely add to those when the drop has confirmed, that it's going to go back up. So there's, what do they call it? Where you opportunity costs, where you're not able to use the money wrapped up in those calls, even though, like I said, you've got time. You may have time on them because they may expire in September. You could be using that cash to either buy puts to capitalize on the downside action, or just be waiting for better entries to re-enter back to the upside. So you got to keep all of this stuff in mind. Like I said, we're still in good shape. There's nothing that has signaled more than like on a 4-hour perspective a downtrend. If we go to the 4-hour, and I hope that people do see that, from a 4-hour perspective, technically we've started a downtrend. We've got a lower high here and a lower low here. So that's the first step to a downtrend, right? Yes, we did go two up on this second 4-hour candle today, but we could easily, we've still got plenty of room to go up, and anything below this 2754, if we turn back down, that's another lower high. So could we just see some sideways action for the rest of the week? That could be what we see as well. CPI may send the market up tomorrow. Whatever economic number is released on Wednesday could send us back down. The number, I think it's jobless claims on Thursday, could send us back up, and then whatever is released on Friday could send us back down. We could just chop. So I'm trying to not adding to any longs to the upside, possibly adding to puts to the downside with time. August monthly expiration is the shortest. I'll probably start going September here if it looks like we're going to get a bigger downturn that could last a little bit longer, just to make sure August is going to be here pretty quickly. It's already halfway through July, so I guess 5 weeks till the August monthly expiration. For right now, that's pretty good. But once we get to the end of the week into next week, you may want some more time, especially if the market's just going sideways. So if it's slowly going down, it's kind of sideways but down and slowly going down, then you're going to want a little bit more time on those puts, which in my opinion would be September. So again, all of this is just my thinking of what I would do with my account. Again, know your own risk tolerance. I don't know how much money you have in your account. I don't know what your risk tolerance is. I don't know any of that, but this is just my perspective of where I see things and what I will be doing in the situations that come up here. So If we go back out to the week perspective, again, we're looking pretty good. Real strong V-shaped recovery, but we are coming to the neckline of that V. Um, you know, I guess there's not really much I can harp on because for the past 3-4 days I've been talking about almost these same markers because we haven't really gone anywhere. I guess it's been more than 3 or 4 days because we go to the day chart. Yeah, I mean 1, 2, 3, 4, 5, 6, 7. So 7 days, which is almost 1.5 trading weeks that I've been talking about. This monthly downtrend line, the weekly broadening formation, and the year flip. So we're fully prepared for what's going on here. That's why we're getting these scalps and day trades during the day on a smaller level, just getting more multiple contracts. That way we can capitalize on any small moves with large profit. Possibly leave runners out there, as we did a little bit last week. But yeah, just approaching it the way that we have consistently, the same way every time. Let's go in here and get our notes ready for tomorrow, so that we can respond and not react, because reacting you don't think, responding you think before you act. The only difference is here we're doing our thinking before the market opens. So we're done our thinking and we can respond to what happens. We're not unprepared for tomorrow's open and just reacting to what happens, right? So you can see from a 4-hour perspective, we've got a little bit of a gap here still. I'm not going to mark it out because on a day time frame, that's not a gap, right? We came up into yesterday's price action today. Almost, did we close in it? 26.55. No, just barely closed below yesterday's price action. So that's also a good indicator that no, we closed. Close was 26.48. Oh no, I'm sorry, 26.48 and 26.55. So yeah, we still closed a little bit below price action. That's also something to note, that we closed below yesterday's price or Friday's price action, because we not only went below it, but we closed below it. So leaning a little bit more of a bullish indicator there. Again, we're here at this 50% of the week. We haven't decisively bounced off of it, right? If this candle would be fine if this was a solid green 2 up, or a green hammer, or just a big 2 that went back to magnitude, that this would be not a big deal. But the fact that we did have that long wick, we did explore that price action, and we haven't totally bounced off of it, means that we could still be trying to decide whether or not we're going to break through that 50% line. And you can see that it's a decent line of support. There's support off of here, essentially here. Yes, it wicked through it, but it closed above it. Support here for at least the morning, and it held it up here. So this is a good level right here, that we're talking about, the 50% of last week, this dashed line right here. So we're just gonna continue to play it how it goes, but let's put our notes in here. We do have a 2 down, 2 up, but it did not reach magnitude, so that is something to take note of. But we'll mark our notes to the downside first. So the low of this candle is 26.30, and let's duplicate this so we can make Tuesday's notes. July 15th. There will be 116 trading days left in the year tomorrow. Today is the 14th. Actually, let's get the close of price action. 26.50. 26.50 was the close. The week opening print was 26.63. So we'll go green at 26.63. So shows we're actually red on the week, we're green on the month, we're green on the quarter, we're red on the year, right? So this is the level that it will take to flip the week green. This is the level that it will take to flip the year green, right? We've got our, why don't we have our expected move in here? Let's edit. Let's not forget our markers, right? Because we have these notes for a reason, so we can quickly glance at them and use them, especially if we're on the go or something comes up where we need to. I think it was like 1.03. Okay. So we do have our high and low 29, right? Alright, so we've got our expected move. We have gaps that are above, we have gaps that are below. So 2 up, 2 down on the 4 hour tomorrow. Again, the trigger is the low of this candle, 26.30, 26.30, and the magnitude is the low of this candle. So the low is 25.32. And again, this is using the strat. Developed by Rob Smith. Again, if you want more information on that, there's information about Rob Smith's YouTube page on in the description of this video. But this is part of how we come up with the triggers and magnitudes and further targets for these different time frames, right? So we've got our trigger and our magnitude. Let's get some extended targets for the 4 hour. I would say let's bring in our day trade chart. That doesn't really bring much else in. Okay, so we've got this 300. It's not too hard. So this 2479, right? This is Fibonacci extensions from the gap and go that we had. Was this 3 Mondays ago now, I believe? So from this move to this move, the fib extensions, you see they've been respected pretty well, so we'll keep that in play, and this 2479 will be our first extended target, and we'll just really leave it at that. 25, yeah, we cleared that. 2462. So our next lower low is 2462, just below this 2479. So it'd be reasonable to think that we could see some type of bounce around this level. So let's go back to the other side. And if you remember, we had a 2 down. If we trigger to the upside, it would be a combo 2 up. So 2 down, 2 up, and then another 2 up would be a combo 2 up with the magnitude of 2754. But first we have to clear this high, which is 2677. Alright, and our magnitude is going to be 2754. Alright, and then an extended target. We can leave these out here. They're still out there from Friday, but we haven't hit them. So 2741. Yeah, the higher high is still out there. So we can see we clearly have mapped out where we would go. Again, if we're in here on a day scalping level, intraday, day trade level, let's just pull up the 15 real quick to make it easy on us. We know that we've got our previous high a day, the 4 hour trigger to the upside, the 4 hour trigger to the downside, and the previous low a day. So we trigger this, we go below this line, target is here. If we go above this line, we have our targets that are up further, right? Why do we have a magnitude? Okay, oh yes, because that's a combo 2 up. Okay. So we've got our targets. We will move our overnight lows and overnight highs here in a second, but once those will be moved in the morning, once the market opens, we'll be able to set the final overnight highs and overnight lows, and we can use those as target points and entries as well. Lastly would be the opening print, which we can't mark until tomorrow's opening print. So that's how these 4-hour levels come into play, along with any of these broadening formations and whatnot. So let's go back to the day, and let's look at how the day would shape out. And again, we're just zoomed in because this is a scalping or intraday day trading levels that we're talking about. We would zoom back out if we're looking at swinging over a day or a week or a month or so on, but this is just so we can have our levels easily visible. Hopefully you've got more than one screen, but just for these video purposes, of course, we're just only using one screen, but it allows you to get a good visual on triggers and things, especially if you're trying to get good entries. So once we have the levels mapped out, we can just go back to the zoomed out levels. So the 2 down, 2 down would actually be a combination 2 up, combination 2 down. Since this combo 2 up, 2 down has already been breached, right? We hit this low, then our next target is going to be here. So the magnitude of the 4-hour is always the trigger for the 1 day, and then our target is this low, which is 2462, which lines up with our lower low, right? That's easy. An extended target. At that point, the month would flip back red, basically at 2438. I just put another target here at this 2350, which is last year's low. 2350. And I don't know if we would really go much further than that, but if we did, we'll put 2263, the top of this gap. That'd be a big move, you know what I mean? But we'll see. CPI is released tomorrow, and if Trump wants to tweet anything, or new tariffs get released, anything could send the thing spiraling lower. And we just want to be prepared with levels marked out, right? If we did reach that 2462 and go below it, now we're triggering the 2 up, 2 down on the week, and we've got magnitude for that, as well as further targets. If we go below that, then we're coming out of this combo 2 up, 2 down on the month, and we got to kind of really start to reassess things and look at, okay, do we start going long? As I mentioned earlier, I'm probably gonna release my calls for August, September, probably won't November, but probably release those calls and take my profit and just ride the puts that we got until we can figure out what exactly is going on. But let's get our upside markers. Our upside would be a 2 down, 2 down, 2 up if we reach this side. So the high is 2677, which is the trigger for the 4-hour as well, because the high of the second 4-hour candle today was the high of the day. So that's why these two triggers are going to be the same. There's not going to be any magnitude. Well, yeah, there is. 2 down, 2 up. The high of this candle is magnitude 2754. Oops. Which you can see plays into this 2 down, combo 2 up magnitude, and we'll leave those targets sitting above, right? So we still haven't gone 2 up, 2 up, 2 up on the week, nor have we gone 2 up, 2 down. We're still sitting in the middle, right? Still an inside candle on the week, right? Yes, it's red. Yes, it's a doji, but so far it's more of a hammer doji. It's showing that price action was explored to the downside but not accepted, and we're trying to see basically where we're going to go at this point. So I hope that everything was clear for everyone today. Um, if not, please let me know in the comments. How I can do a little bit better. Help possibly explain things better. Do I need to go slower on certain parts? Do I need to go faster on others? In your trading methodology matches up with mine? Do you do something totally different than me, or do we have any kind of overlap? It's always interesting for me to see what other traders are doing and how we may be doing it alike or differently, because there's so many different trading styles out there. But right now we just want to keep in mind that we've got our swings for August, September, November, July. I'm sorry, January, of course. But we're just trying to protect those at this point. Now that we are getting some, a little bit more chop and what looks like could be a little bit more bearish activity. Not saying it's going to be a huge dip. I'm not saying we're going to go fill, all these gaps. Maybe we fill this gap. That would be, pretty healthy pullback. And if we were able to fill this gap and turn around before, reaching the bottom of this three, that's definitely a bullish sign. We would have a higher low on the week, and that would be some triggers to go long again on some more longer term swings, and see how high things can go. So again, I hope you enjoyed this video. Do all the YouTube stuff, like, comment, subscribe. Let me know if you like the video and what I could do better, if you think I can do better. Follow us on Twitter. You can keep up with the trades that we're doing throughout the day, and just follow along. Let us know what you're doing. I hope everyone has a good rest of the night, and good luck with trading tomorrow.